This is Rod Kusin and Spooman for Risk on February the 15th, 2010. All times on the chart are Central Standard Time. And the purpose of our video today is to discuss where we expect the market to go on the 16th, Tuesday, 2010, February 16th. And a little bit about a new methodology that we're using for tracking what we might loosely call support and resistance levels. At least we would refer to them as retracement levels. And we're using a new method for devising those levels by way of the use of the premium and the TIKI. Now, if you've looked at our videos in the past, you know that we have some rules for determining what we expect to occur when the premium hits new highs and or new lows. We've taken that a step further now for determining retracement levels as well. And we'll explain a little bit more about that in just a moment. Let's first of all take a look at where we are right now. The market is closed and we have a gap up here at 1079.50, and we have a support level down at around just under 1066. Tomorrow, Tuesday, February 16th, 2010, we anticipate a very high probability sell-off. Now, that doesn't mean the market's going to necessarily tank. We just mean that the overall direction and trend of the market for Tuesday should be down. In order for that to occur, it's quite likely, though, that we should be able to, first of all, fill the gap at 1079.50, which may or may not occur, but more than likely. And after a rally into that gap fill, we should be seeing the beginning of a sell-off. So if we're correct on that, we're looking at about a 15-point spread minimum between the gap fill and the currently existing support level. Now, we have support levels below that as well, and we'll talk more about that in a minute. But let's go back to the beginning of the day on the 12th and discuss a little bit about what we were able to achieve by way of the use of this new methodology. Whenever you see a cyan colored line, it indicated that the premium suggested that the Spoos would return to that level and or exceed it. And in each of these three cases, it did so. Here, here, and here as well, we saw the Spoos go higher. Here, that was more of a gap fill. Now over here, that's a little bit of a crooked line, isn't it? These are all done manually, by the way. That's why we're a little off on them. This level here came off of the TIKI. This was off of the premium. So again, these are retracement levels. That's off of the TIKI. Again, off of the premium. These two lines off of the TIKI. Off of the premium. And that's where we stand at the moment. Now we go down here, we see levels below 1050 as well being projected by the premium, and this takes us back better than 5 days ago. Now let's go back to the beginning of the day and give you just a little bit of an insight into how we arrived at this conclusion. In watching the ESI and X, we basically asked the computer at what price did the premium need to be in order for it to be predictive that the Spoos would retrace and or go lower. So let's deal with the lows first, the low retracements. And we determined if the premium dropped below negative 3.54, which it does here, the probability was quite high that the Spoos should return to that level. So right in here, you notice where the premium is. So it's right below that level that we just discussed. Now let's look at this level here. Here it happens again. and it retraces. And then over here, just lining up the horizontal lines here, or pardon me, the vertical lines, the global lines, this corresponding with this point here, and it retraces. Okay? Now it barely hits this point too, and we didn't see any need to draw that because it didn't last very long. But now let's go forward. Through this period here, we don't see any kind of drop in the premium low enough for it to become predictive. Nothing predictive here. Now the premium does drop itself, but we're using an indicator on this, and we want the indicator to drop below that negative 3.54 as well. So that doesn't register. Let's come over here. And again, nothing happening, nothing happening, nothing happening. All the way into here again, nothing happening. Let's move it forward. Let's come right down to this point here. There you have it. Drops again. So that's where we come to the conclusion that 1065.50 should be a level that we may see retraced to on Tuesday. Finally, in the latter part of the afternoon, again, right in here, we see this drop. Let's go backwards again. There we go. So we see this drop in the premium, and sure enough, that becomes a retracement level, which is returned to over here. And we have nothing further to predict. Now we used, basically speaking, a similar method on the TIKI. Right? These levels were achieved by way of the TIKI. So they're a different color. And again, we're drawing these manually. We use the computer, a computer program, to generate what the level needs to be. And then we use that level and find out where the premium is at the time the Spoos hit a low, or for that matter a high, and run these retracement lines. We're just drawing them manually. Now let's look at the highs. Right, now let's look at the global approach again around 855. The premium goes above this negative 1.03 line, establishes a retracement point. Market comes back just a few minutes later. Over here, does it again. Establishes a retracement line, up she goes. That's a gap. We don't worry about that. And then way up here, notice, right in here, we go right above that line. So we expect that retracement back to around 1075.25, which it, in fact, it returns to that level, and then later on here, once again, around 1076, and market comes back up. Okay, so those were projected based upon what we were able to come up with via the premium. And again, we use the TIKI in a similar fashion. We're going to continue to use this methodology in the days ahead to see how accurate it becomes, but we've been tracing it now for some time, and this is looking really, really good. So keep abreast of how we're proceeding with this. It's looking quite promising, and you can imagine the usefulness and utility of it in terms of where to take the trades and how long to hold those trades, potentially. It has a great opportunity for significant profits if you know where these high probability retracement lines, retracement prices, are going to be. And that's the subject for our discussion today. This is Rod Kusin and Spooman for Risk.